Fed's going to raise by 75 basis points and the market goes down. It's not being desensitized to what's right in our face, maybe. Maybe it's not in the markets what the Fed has to do.
Well, I don't know. I think there's so many unknowns right now. It's not just the Fed. Obviously, that's the big elephant in the room. But look what happened over the weekend. I mean, Gazprom shuts gas flow to Europe indefinitely. That's a big headwind. China is closing again because of COVID, and they cut their RRR, the lending rate, by 200 basis points because growth is so slow. And of course, yes, then you have the Fed now thinking about 75 basis points. By the way, I think they can do 75 basis points after you look at the non-farm payroll numbers last Friday. If you saw the wage numbers, it was up 5.2% year over year. Home prices are up 18% year over year. Rents follow home prices. So rents are a sticky part of inflation. So the inflation story still remains. And that's the headwind. And the Fed is really focused on getting that under control. I don't even know if they can get it under control, Joe, to be honest.
Right. And what would that portend for the market, the S&P at 3,600? So that was the last time, that was the lows. Maybe people have said we're going to go through those lows, but you'd be much closer to an ultimate bottom at 3,600 unless, you really think this is going to get serious in terms of not being able to handle inflation and going higher and higher and stagflation. And you can factor in a lot of negative outcomes. But 3,600, what would you be buying at that point? What would you be dabbling in at that point, or would you?
Yeah, and I think we could easily get back to 3,600. I think we're in a trading range, but we don't even know how QT is going to impact the overall liquidity in the market. It's certainly going to drive things up. So I think we're in this trading range. I think you do want to focus on being diversified, owning quality, owning free cash flow companies. I love the interview with Starbucks. You know I own that one. I'm happy Brian Cornell is staying at Target. I own that one as well. The valuations are reasonable. And I think you just want to very much focus on fundamentals where you feel confident. Where do I feel confident in addition to those two names? Energy, even at $50 oil. And I'm not saying oil is going back to $50, but even at $50 oil, companies in the energy sector are going to still be printing money. And the free cash flow stories remain, and the valuations are very attractive. I think the LNG build out is very interesting. Like a Floor, for example, or a NextEra, for an example. I think agriculture remains in a secular tailwind, and I still think financials, as rates go higher, financials are cheap. And so I think you can kind of pick your spots within that as well. So I think there are places that you can pick. I don't think you necessarily need to jump in with 2 feet. I have cash, I have patience, and I'm looking for fundamentals that, to me, I feel good about, and the earnings stories I feel pretty good about. And that's the biggest question mark at this point is earnings. Where are they going?
Shepard Smith here. Thanks for watching CNBC on YouTube.